So when you analyze a company like Apple, it's very important to learn and just to know some basic facts about how well or badly a company like Apple has been doing in the past, financially and operationally, and what are the expectations that people have on a company like Apple. And to address this factual information analysis so that you have a pretty good idea and sense about where the company is, we have 4 different factors for you to look into: Apple's historical growth, historical return, expected growth, and expected return. Now first, on historical growth, it's just how much Apple has been growing in the past on different metrics, from revenue to earnings to dividends and to free cash flow generation. And the logic behind looking at these historical data points is to help you understand how well a company has been doing, because operating momentum is quite important. And a lot of times when you fall in love with a company, it's quite important to look at how well the company has been doing in the past. And if the reality is different from your perception, that raises questions. So for a company like Apple here, you can see the amount of growth the company generates in the last couple of years has been quite consistent. Its revenue number has been growing about 3.4% over the last few years, earnings per share at 10.2, and dividend at about 17%. And to put these numbers in context comparing to the universe, you can see the rankings to each one of them, with revenue growth in the medium section, earnings per share in the high category, and dividend per share in the very high category. And finally, its free cash flow to equity is also ranked very high. And when we calculate these rankings, we don't just use the amount of growth Apple has in the last 1 year. We go beyond the last 1 year to the last 3 to 5 years, wherever the data points are available, so that the rankings reflect a more consistent and steady history of a company and how much that company has grown in the past. So the general rule of thumb here is if a company has grown pretty consistently positive in the last 3 to 5 years, it's always a good sign. And on the contrary, if the company has been growing pretty up and down and quite choppy growth in the last couple of years, it raises red flags. So overall, for a large company like Apple, it's quite impressive to see it's still growing in the medium section amongst all the stock universe we cover, at 3,640 to be exact, because the traditional wisdom is if you are a smaller company, you tend to grow faster than a larger company because your base is very low. Whereas for Apple here, since it's one of the largest companies in the world, but it still grows at a pretty impressive rate, that in itself is a positive sign. And the same logic applies to how much the share price has been growing in the last couple of years. And to understand if the share price growth reflects the underlying operational growth. And it's quite good to see that the amount of share price growth kind of matches to the amount of operational growth in the case of Apple. So year to date, the share price of Apple has been growing at 8%, whereas in the last 52 weeks, it's about more than 20. And in the last 2 years, almost 100%. And once again, you can see within the whole stock universe how much the share price for Apple has been growing relative to the other universe. And once again, within the whole universe of more than 7,000 companies, you can see Apple has been growing in the medium section relative to all the other stocks. Now those are the past in terms of how much Apple has been growing in the last few years. Now let's look at what are the expectations for Apple going forward to the future. And the first metric we look at is how much the sales and analyst community is forecasting Apple's share price to grow. So for example, simply if Apple's share price today is at 100 and the analyst community expects Apple to grow at 20% on the share price, that means in 1 year time, they expect Apple's share price to be at 120. And in this case, the target return for Apple's share price in the next 1 year by the analyst community is about 17.5%. So this data point in itself shouldn't be trusted and relied upon solely, but it gives you a very important indicator of how much the market expects Apple to grow. And they're not always right or wrong, but it's just a very useful indicator and a reference point, and it helps you gauge around the market sentiment on a company like Apple. And once again, that expectation of 17.5% sits in the middle at about 4,000 rank. And now finally, when people expect Apple to grow, not only they give forecasts on the share price, but also they give forecasts on the operational performances such as revenue and earnings. And in this case, we can see Apple's expected to grow at a pretty impressive rates on revenue and earnings. For revenue, the market expects Apple to grow at 33.5%, in the next 12 months. And for earnings, the market expects Apple to grow at an impressive 70.5%. Now, part of this high growth expectation for Apple, such a large company, is due to COVID. Because last year, COVID disrupted a lot of numbers. And artificially, a lot of companies will have a low base to beat. So that is why when you look at these raw data points, it's very easy to say, wow, those are really high numbers. And that is why the rankings are also important to refer to, because they put these expectations in comparison with all the other stocks. And as you can see, the rankings for the expected growth numbers here for Apple is in the high category. And together, the final rank for the expected growth is at 1,601, with pretty equal contribution from the revenue forecast as well as the earnings per share forecasts. So overall, what do we learn about the historical numbers of Apple and also the future expectations of Apple? Well, by looking at these four factors, it's quite easy to say Apple has been a pretty impressive company in the last 3 to 5 years, based on the numbers we look at. From revenue growth to dividend growth to free cash flow growth and finally to the share price growth. And that's a solid proof that a company like Apple has been doing quite impressively over the past. And now looking into the future, it's very important for a company like Apple, who has been doing well, to maintain this momentum. The expectations for Apple based on revenue forecasts, earnings forecasts, as well as the expectation for the share price growth are all pretty satisfactory. So overall, it is a positive assessment on Apple.